Let's be brutally honest for a moment. The single most significant action taken by the entire global financial system regarding the Iraqi Dinar and Vietnamese Dong is a unified, resounding, and silent no. This isn't a whispered secret or a hidden conspiracy. It's the deafening reality you encounter the moment you try to bring your prized, physically held currency back into the fold of a regulated mainstream institution like Chase or Wells Fargo. Their refusal isn't a minor inconvenience or a simple policy footnote. It is the most critical piece of data in this entire saga, a flashing red beacon of warning that the entire investment thesis is fundamentally flawed at its core. Think about it with clear-eyed logic. If there was even a remote, legitimate possibility that these pieces of paper were about to undergo a historic revaluation, transforming every $1,000 investment into a multi-million-dollar fortune, do you genuinely believe the most sophisticated, profit-driven, and interconnected financial institutions on the planet would systematically abstain from participating? They have trading desks that speculate on everything from the value of the Japanese yen to the price of copper in Peru. They have teams of PhD economists and geopolitical analysts whose sole job is to identify and capitalize on global macroeconomic trends. If the Iraqi Dinar or Vietnamese Dong were the slam dunk, generational wealth transfer event that the online gurus claim, these banks would be the first in line, building massive positions and creating sophisticated financial products to leverage that inevitable outcome. The fact that they are not just cautious but entirely absent from this market speaks volumes far louder than any promotional YouTube video or forum post. Their refusal is a calculated, risk-based decision derived from cold, hard facts and a deep understanding of how the global monetary system actually functions, not how we might wish it to function. This no from the banking giants is your starting point for a sober investigation, and it forces us to ask the pivotal question: what do they see that the hopeful investors are being encouraged to overlook? The answer lies in the brutal economics of the nations in question, beginning with Iraq. The narrative sold to you is one a resource-rich nation on the cusp of a great comeback, ready to restore its currency to a mythical former glory. The reality is documented by the World Bank, the International Monetary Fund, and every credible economic agency is starkly different. Iraq is an economy surviving on a monoculture of oil, which accounts for the vast majority of its government revenue, making it terrifyingly vulnerable to price shocks in a single commodity. Decades of conflict, corruption, and internal political fragmentation have left its economic infrastructure in shambles and its institutions weak. The primary focus of the Central Bank of Iraq is not plotting a magical revaluation to enrich foreign speculators. It is a daily, grinding battle against inflation, managing the immense logistical challenge of funding a bloated public sector and attempting to achieve a semblance of monetary stability for its own citizens. A sudden, massive upward revaluation of the dinar would be an act of economic self-destruction for Iraq. It would instantly make their only significant export, oil, prohibitively expensive on the global market, crippling their revenue stream overnight. Simultaneously, it would vaporize the competitiveness of any nascent non-oil industries before they could even get off the ground. Internally, such a move could trigger hyperinflation as the new, massive buying power of the population, unmoored from a corresponding increase in domestic goods and services, would send prices into a stratospheric spiral. The idea that any sovereign nation would willingly inflict this kind of economic suicide is not just improbable. It is a fundamental misunderstanding of the purpose of a national currency, which is to serve as a stable medium of exchange and store of value for its own economy, not to function as a lottery ticket for outsiders. Investment case requires you to believe that the Iraqi government is prioritizing the fantasy of foreign currency holders over the stark, daily economic survival of its own people and the stability of its state, a proposition that collapses under the slightest scrutiny of real world governance and national self-interest. This leads us directly to the second pillar of the scam, which is the complete misrepresentation of how the global foreign exchange market operates. The Forex market is the largest financial market on earth, with a daily turnover of over $7 trillion, but it is not a single unified bazaar. It is a tiered system, and currencies like the dinar and dong exist on the absolute fringes in a realm known as the exotic or illiquid market. When you buy dinar from an online dealer, you are not participating in the interbank market where major currencies are traded. You are buying from a retail vendor who operates a closed loop. These dealers sell you the currency at a price significantly higher than the official mid rate you see online, and they are the only entities who will buy it back from you, always at a steep discount. This spread is how they guarantee their profit, regardless of any minuscule fluctuations in the official exchange rate. For a bank like Wells Fargo or Chase, dealing in such an illiquid asset is a regulatory and logistical nightmare. They have no viable outlet to offload large volumes of these notes. They face immense reputational risk by associating with a highly speculative and often fraudulent market, and they gain absolutely nothing from it. Their refusal is not a blockade against your wealth. It is a prudent and legally sound decision to avoid a toxic asset that offers no legitimate financial utility. This fundamental lack of liquidity is the concrete wall that your investment dream smashes into, a wall built not by conspiracy but by the immutable laws of global finance. So, if the core economic argument for a revaluation is a fantasy and the banking system's rejection is a rational response to that reality, what exactly is the powerful engine that keeps this decades-old speculation alive and persuades new people to part with their money year after year? The answer lies in a brilliantly constructed, self-sustaining ecosystem of misinformation that operates like a digital cult, preying on hope and exploiting a deliberate gap in financial literacy. This ecosystem is fueled not by economic data, by the relentless production and dissemination of intel, a deliberately vague term for rumors, fabricated documents, and wildly misinterpreted news events that are presented as coded signals of an imminent financial event. The playbook is meticulously crafted and has been refined over years. A routine meeting of the G20 finance ministers becomes a secret summit to finalize the global currency reset. A standard issue press release from the International Monetary Fund about technical assistance to Iraq is dissected for specific keywords, twisted and rebroadcast as a guaranteed confirmation that the dinar's value is being reassessed. A necessary change in Iraqi banking regulations aimed at combating money laundering and aligning with international standards is heralded as the final logistical hurdle before the RV goes live. This constant, daily drip feed of so-called evidence serves several crucial psychological purposes. First, it creates a perpetual state of imminent reward. Tomorrow is the day mentality that keeps existing holders from selling their now worthless paper and encourages them to hold the line, while simultaneously attracting new buyers who are terrified of missing out. Second, it fosters a powerful sense of community and belonging among believers. Online forums and social media groups become echo chambers where faith is rewarded with validation, and any form of skepticism or factual counter-argument is immediately dismissed as disinformation spread by bank cabals or naysayers. This creates an unbreakable feedback loop where the continued failure of the prophecy to materialize is not seen as evidence of its falsehood, but rather as proof of its profound importance and the powerful forces arrayed against it. The very absence of the revaluation becomes the strongest piece of evidence for its eventual arrival, a logical fallacy that is immune to reason. This is the hallmark of a sophisticated psychological operation, not an investment opportunity. The primary product being sold is no longer the physical currency itself. The currency is merely the token, the tangible representation of the real product, the dream of effortless, life-altering wealth and the emotional high of being part of a secret, world-changing event. The dealers and prominent gurus are not investment advisors. They are merchants of hope, and their entire business model is predicated on the revaluation never ever happening. If it did, their lucrative industry selling overpriced paper, charging for premium, hotel subscriptions, and hosting paid seminars would vanish overnight. They profit exclusively from the endless wait, not the event. This is why the timeline has been continuously shifting for over 2 decades. The goalposts are always moving, and the narrative evolves to absorb and explain away any contradictory reality. When banks consistently refuse to buy, it's because they are part of the conspiracy to suppress the truth. When economists universally dismiss the idea, it's because they are ignorant or paid off. When the governments of Iraq and Vietnam show no indication of such a plan, it's because the event is so sensitive it must be kept secret until the last possible moment. Every rational objection is co-opted and woven back into the conspiracy theory, strengthening the believer's resolve. This brings us to the specific case of the Vietnamese Dong, which is often presented as the more legitimate side of this speculative coin due to Vietnam's impressive economic growth. Proponents point to the nation's booming manufacturing sector, rising GDP, and increasing foreign investment as undeniable proof that a revaluation is not just possible but inevitable. What they deliberately omit is the explicit and publicly stated monetary policy of the State Bank of Vietnam. Vietnam's economic success is heavily reliant on its exports, and the central bank actively manages the Dong's exchange rate, often intervening in foreign exchange markets to prevent rapid appreciation and to maintain a competitive advantage for its goods. A stronger currency makes exports more expensive, which would directly harm the very industries driving its growth. The SBV's goal is stability and controlled, gradual adjustment to manage inflation, not a sudden seismic shift that would throw its entire economic model into chaos. The notion of an overnight revaluation is the exact opposite of the central bank's documented and observed behavior for years. Believing in the Dong RV requires you to believe that the Vietnamese government is willing to sabotage its own hard-won economic miracle, making its textiles, electronics, and agricultural products less competitive on the world stage solely to benefit foreign currency speculators. A proposition that is as illogical and economically suicidal as it is for Iraq. Therefore, when you step back and view the entire picture with dispassionate clarity, the so-called IQD-VND investment reveals itself not as a financial opportunity, as a perfectly engineered psychological trap, one that leverages hope against logic and community against facts. The refusal of Chase, Wells Fargo, and every other mainstream financial institution is the logical conclusion of this analysis, not the starting mystery. They are not the villains in this story. They are the canaries in the coal mine, and they have been singing a warning tune for years that many have chosen to ignore. The entire structure of this speculation is designed to be a closed loop, a financial Ouroboros where the only money being made consistently is by the dealers who sell the currency and the gurus who sell the dream, all funded by the hard-earned savings of individuals who have been convinced to bet against the entire global economic order. The real revaluation has already happened, but it's not happening in Baghdad or Hanoi. It's happening in the bank accounts of the promoters every single time a new investor buys into the fantasy. The profound danger here extends far beyond the direct loss of the money used to purchase the currency. It lies in the monumental opportunity cost. The thousands of dollars, the mental energy, and the emotional hope that are poured into this speculative black hole are resources that are being systematically diverted from legitimate, productive, and wealth-building financial activities. Imagine if that same capital and fervent belief were channeled into a diversified portfolio of low-cost index funds which track the growth of the actual, productive global economy that the dinar gurus claim is rigged. Consider the potential if that energy was invested in education, in starting a small business, in paying down high-interest debt, or even in purchasing assets like real estate that generate tangible value and cash flow. These are the proven, albeit unsexy, pathways to building genuine, lasting wealth. They don't promise overnight millions, but they are built on the solid, unshakable foundation of economic reality, compound interest, and participation in actual economic growth. The dinar and dong fantasy, by contrast, is a zero-sum game where your gain can only be realized through the economic self-immolation of a nation-state, an event for which there is zero historical precedent and overwhelming economic evidence against. This is the final and most important wake-up call. Protecting yourself from this trap and securing your financial future requires a conscious and deliberate shift in perspective, from seeking a secret loophole to understanding and participating in the real mechanics of wealth creation. It requires you to become the CEO of your own financial life, to base your decisions on transparent data and historical evidence, not on secret whispers and manufactured hype. The empowerment you seek will never be found in a stack of exotic banknotes. It is found in financial literacy, in understanding what a bond is, how a stock represents ownership in a company, and why diversification is your single most powerful shield against risk. It is found in the quiet confidence that comes from knowing your financial plan is built on a bedrock of reality, not the shifting sands of internet rumors. So here's your definitive call to action, the one that truly has the power to change your life. Stop the endless cycle of checking for intel. Unsubscribe from the YouTube channels and leave the forums that feed you a constant diet of hope and anxiety. Take all the currency notes you have stored away and physically hold them in your hand. Look at them and make a conscious decision. Are these pieces of paper a real asset, or are they merely the physical tokens of a dream you were sold? Then take that decisive step back into the real world. Open an account with a reputable brokerage, not a currency dealer. Schedule a meeting with a certified fee-only financial planner, a fiduciary who is legally obligated to act in your best interest, not sell you a product. Tell them your goal is not to get rich quick, but to build wealth slowly and surely. Invest in the very global economy that the scam artists tell you is broken, and you will discover it is far more resilient and rewarding than they could ever admit. The greatest wealth building tool you possess is your own rational mind. Don't let it be hijacked by a fantasy. Reclaim your time, your capital, and your future today, and embark on the only proven path to financial security.